My guest today on Stansberry Research is Frank Giustra. He rarely does interviews, but when he does, he usually has something very important to say. He is a philanthropist, an entrepreneur who is involved in numerous ventures, and perhaps is best known for being a mining maverick behind the creation of some of the world's largest gold and silver mines. So please welcome Frank Giustra. It's an honor having you as my guest during my premiere week here at Stansberry Research, Frank.
Welcome back. We missed you, really missed you. So welcome back, and I'm honored to be your first.
So Frank, when I was doing my research and I went back to the reels, I looked back at our interview, which we did about 1 year ago to this date. And it actually frightened me quite a bit because everything you warned about an economic catastrophe unfolding worse than 2008 has really played out the way you said it would. 1 year later, a lot of investors and myself are questioning and wondering, does it get better from here?
Going back to what I was saying a year ago, in reality, what I was predicting back then wasn't really that difficult to predict. It's not like you needed a crystal ball. Just as long as you read history books, there's enough information about past patterns that we could plainly see were happening. It was just an overextended global debt bubble that was ready to be pricked.
And on the topic of the US dollar, Frank, you noted that not all currencies last forever. So how do you see the state of the US dollar right now?
Well, I don't think there's any way you can call it a safe haven asset anymore. Although some people still believe it is. You've got a situation where you have zero interest rates in the US now. Finally, when we talked about this last year, I said, we're going to get to zero interest rates first, then they're going to print money. And at that point, who's going to want to buy all those treasuries as they're creating all of these fiscal deficits, adding to the debt pile? Who's going to buy those at zero interest rates? And especially when you see that American exceptionalism is dissipating very quickly. What reasons do people have around the world to buy US Treasury bills? And you're going to have, $8.5 trillion worth of Treasury bills come due by the end of 2021. Who's going to buy those? They have to be refinanced. And so I think that the US dollar is going to come under increasing pressure. It's already started to come down. And they continue to print money and they continue to monetize all of this government debt. There has to be an end game.
Frank, do you think it's hard for people to fathom a world where perhaps the US dollar is no longer the reserve currency of the world?
Well, and again, I think a lot of people still believe that America will come out of this okay, as it's come out of other past crises over the centuries. But this time it is different. They're destroying the value of the dollar by printing trillions and trillions of it. If you think about it, it took 94 years to get to a $1 trillion balance sheet at the Fed. It took another 12 years to get it to 7 trillion. In the next decade, it could be 20 trillion. I mean, at the rate they're going. I don't think you can remove that stimulus once you put it in. They put themselves into an inescapable trap. And I've said this before, there's no way out of this now. And they're just going to continue to do what they think works and what thinks will support the markets.
And when you say they, are you referring to the Federal Reserve?
I'm referring to the Federal Reserve and government, who are now working in tandem. I mean, there's no Fed independency as we always used to believe there was. That ended back in 2001 after 9/11. The Fed works with government, and basically, although the Fed has lost, or monetary policy has lost all its efficacy in terms of the real economy, its only remaining function is to support the stock market and to monetize government debt and then eventually inflate it away. That's its only mandate. That's the only reason for their existence at this stage, because they're not having an effect on the real economy. And we've known that for over a decade.
Well, Stanley Druckenmiller, came out with very similar comments there, Frank, where he basically said that U.S. equities are a Fed-fueled party right now, but we all know what happens after a good party.
Well, it's worse than it's worse than that. I mean, it's like well past midnight. It's like 4 o'clock in the morning. They're still pounding back shooters. I mean, this is really insanity where these markets are right now. There's no, the markets are completely decoupled from the real economy. There's no relationship left. This is all Fed fueled speculation.
So is it just an illusion, Frank? Because on one hand, we have US equities making higher highs, but then we have the US economy telling a very different story. So which one is illusion? Which is reality, Frank, for you?
The reality is what's going on in the real economy around the world. I mean, you've had, the pandemic has basically accelerated what was already very slow growth and a recession that was ready to happen. And I was talking about this last year. So it's accelerated that now, and it's going to take a long time to recover from the effects of this pandemic. I think a lot of people don't realize that we're not going to go back to a new normal. It's not going to happen. And I think that hasn't quite set in with market players who are just on a frenzy right now. If I were to choose which is real, it's not the market, it's the real economy. You just have to see what's going on with jobs, what's going on with growth. And I just don't see what justifies these market valuations. Now, mind you, given that the Fed will continue to keep rates at zero forever, they've said as much. They have no interest in even thinking about raising them. They actually want to overheat the economy. They don't mind inflation now. And they're going to continue to print money as needed to monetize all of that government debt. You could have a scenario like we have seen in Japan over the last 30 years, where the market's gone, it peaked in 1990, and it's basically gone sideways for 30 years. Because you've got all of that free money support that prevents it from falling apart completely, but you're going to be subject to frequent severe corrections, which will require more monetary stimulus. And so you could have just a sideways action with the stock market. What I'm really afraid of is the bond market. I think the bond market is going to get absolutely destroyed. And, I just don't see any reason why people would want to own bonds when the return is zero and you're at risk of inflation shocks, which destroy the value of the bond, of the nominal value of the bond. So I think that you could see a scenario where stock markets, go sideways for a very, very long period of time with frequent crashes when some event happens. But it's the bonds that I'm really worried about.
I want to go back to a point you made earlier about dollars of cash no longer being a safe haven. Do you think a mind shift is happening here where people are questioning whether they are safe in cash?
Well, yeah, no, I mean, that's cash is not safe. Cash and bonds are the two worst things to be in because they can be inflated away, and we are going to see inflation. It won't be right away, but I think in the next 18 months, couple of years, the effects of all this monetary stimulus is going to cause inflation to happen. And so you don't want cash. You need some cash because there will be opportunities. But I would be definitely, and stocks are overvalued for now. There will be a time, like March was probably a good time to buy some stocks. They're certainly not at good value right now, but they will have their moments throughout time. But gold is the place to be. I mean, there's no doubt that that's the one asset that represents, safety of your wealth.
But I think one of the things I often hear about gold is, why would I be in the metal? It doesn't pay a dividend. It doesn't do anything for me. Do you think that people are changing their acceptance of gold, and that's why we've seen this bull run we're experiencing right now?
Definitely, you've seen the beginnings of an interest in the gold market. The smart money, and you mentioned Druckenmiller, and there's guys like Dalio and many others that have seen the writing on the wall and have gone long gold. But certainly the general public is still not convinced. And but it's definitely starting. People are starting to wake up and smell the coffee. But I can just give you some anecdotal information. I have friends that I've tried to convince into buying gold over the last several years. I've practically begged them to buy it. Some have. Some waited till gold reached the old high and then decided it was time to really believe in gold. But there are a lot of people that still believe that gold is risky. And it surprises me that that's the way that people think, because they're just not informed about what has happened throughout history. And I think that you're going to see eventually the panic buyers will come in. And they always come in, and every bull market has a certain cycle, in the way that it evolves. And you will see panic buying coming in. I always think, they should rather, panic now and avoid the rush, because eventually they're going to have to pay a lot higher price. But it certainly, we've seen the beginnings, but we're certainly nowhere near the top, nowhere near.
And Frank, you're not exposed to U.S. equities, which is something that surprised me.
No, and I maybe should have bought some in March, but I didn't when the market crashed. I didn't quite see the impact that all that monetary stimulus would have immediately on the stock market when we were in the middle of a pandemic. But anyways, it did what it was designed to do, which was get the market back up, and that's worked quite well. But no, why would I own? And I'll give you an example. Why would I own Apple? If you put all the precious metals companies together, they add up to a third of the value of Apple. All of the precious metals companies. Why would I do that? It's just it doesn't make any sense. These things are overpriced. They're overpriced only because of the monetary stimulus, free money, and where's your upside? I mean, sure, they can go up higher, but you're really looking at it from the point of view is how lucky do you feel that it's going to go higher?
Well, I guess a lot of people see it as, look, I love Apple products. I love the company. It's great management. Look what the stock has done. It's a safe bet.
Nothing's a safe bet when it's overvalued. Now, obviously, Apple's not going to go to zero, but why would I buy something that's overvalued with the hopes that it's going to be even more overvalued? I mean, I think with zero rates, you have discounted all the future value to net present value. All the future earnings have been already discounted. You can't go lower than zero in your discount for net present value. So I just think where's the upside?
How can we apply that mind frame to gold then? Is the metal undervalued for you?
Relative to everything else, because everything in this world is relative, yes. Because it's never that gold is going up on its own. What's happening is the value of the currencies that it's being measured against are going down. And as long as you continue to believe that currencies, as I believe, the currencies are going to be debased in value because everybody's doing the same thing, printing all this money, so they're reducing the value of the currency. That's what's taken. It's relative. The gold price is just relative to the value of the currencies. The winners are going to be gold, commodities, not bonds, not cash. Let me repeat that: gold, commodities, not bonds, not cash. Those are the winners if everybody's racing to the bottom.